In our final trade of the day, I am joined now by Paul Foster of the Street Insider, taking a look at bank earnings coming out this week and beyond. Thanks so much for coming on the show today.
Hi,
so let's take a look at the overall financial sector, the XLF. This is a basket of banks that this ETF is tracking here. So what is the options market predicting about the XLF?
Well, in the XLF, call put volume is really high, 6 calls to 1 put. And a lot of those are the weeklies. The January 30 weekly calls are active, and the traditional January 29 calls are active.
So that sounds like traders are bullish on the banks going into this earnings season. So what do you think is the catalyst?
Well, obviously, there might be more legislation on Capitol Hill in the next 2 months. However, as housing prices go up, stock market prices go up, there's more assets under management at Bank of America, Wells Fargo, JP Morgan, so there's more fee income. Fees and commissions that are generated with the higher valuations of the equity markets and housing markets.
So less regulation means more money for the big banks.
Correct.
Let's take a look at Bank of America. What are you seeing here?
You know what, Angie, those volatilities are really low comparatively to 4 years ago, 2 years ago, 1 year ago, or even a quarter ago. And there's call buyers, bullish people looking for the stock to continue to trend higher.
How far up do they think this stock is likely to go, or maybe get a bump up from the earnings news this week?
You know, some of those active strikes are the 32 strikes here in the 2017, or excuse me, now we're in 2018, and in the 2019 era.
Are you seeing institutional players in the banks or just average Joe players in the bank trade?
There's always going to be a little retail paper, but yes, there's large institution. That's part of the reason why Bank of America is consistently on the higher volumes on the board.
Thanks so much for coming on the show. Have a great trading day.
Thanks, Angie.